The broadcast is now starting. All attendees are in listen-only mode.
Hello everyone, welcome to another CW webinar. I'm Beatriz Aguiar and me and my team are here to bring you the main highlights of the first of 2024 update of the Global Cement Volume Forecast Report. So for today's presentation, I would like to introduce myself, Beatriz Aguiar, a junior business analyst at CW Group, based in Lisbon, Portugal, and my colleague Prashant Singh, director at CW Group, based in Mumbai, India. So on today's agenda, we will start with an introduction of our company, what it is, what we do, and what we have to offer, and share the main highlights of first half 2024 of the Global Cement Volume Forecast Report, VFR. We will start with an overview and the methodology, the global macroeconomic overview, and then we're going to talk about the global cement consumption and close with some remarks. So CW Group is presented across three distinct branches, which are advisory, research, and media. Under advisory, CW works with major global consultancies and leading institutions, including the World Bank and funds on projects. We provide consulting and advisory expertise on a diverse product portfolio. For example, a recent sample of CW advisory projects include a detailed study for the World Bank on circular economy for the MENA and West Africa regions. We have also helped the IFC to evaluate a potential investment for a major West African cement manufacturer. And another example includes a complete business process analysis for an online art gallery website. Now, talking about research, CW focuses on global cement demand, as well as detailed industry and country reports. We provide historical as well as forecasts for markets in a variety of products, including one of our main products, TPR, Trade Prices Report, and VFR, the Volume Forecast Report, this one. We also provide commodity price assessments for cement, clinker, as well as pet coke and coal. And for the media, CW has the newsletters that you can subscribe for topics of interest like cement, building materials, paper and pulp, pet coke, bulk, and coal. Also, you can have online access to our vast database. And we have also some industry-specific meetings, which we have started to hold in person. And on the 16th and 17th of October of this year, we are going to have a conference in South Africa about the cement business and industry. Now, I would like to briefly highlight some of our key benchmark reports that provide essential insights into the cement and building materials industry. The first one is the Global Cement Trade Price Report. We have updated for the first quarter 2024. The next one is Global White Cement Market and Trade Report. We are already updated for this year. And the Calcium Aluminate Cement Market Report and Forecast that we also updated for this year. If you want to search for more information, you have the links below. To provide you with a better understanding of what you can expect from CW VFR, this report, this version of the extended version of the VFR is published in November, and a quantitative update is published in June. In the short version, our report includes a global and regional analysis of cement production, cement consumption, net trade, and capacity. We also provide a forecast and capacity revision for 2023 and our forecast for 2028. For this version, continuing the methodology adopted last year, we provide three scenarios. On this slide, you have the map. As you can see, represents a footprint covered by our VFR report. It's our constant endeavor to increase our coverage, also depending on the availability and consistency of information, obviously. For the methodology, the VFR includes historical annual data on cement production, output capacity, consumption, and net trade. Forecasts are made country by country based on past tendencies and macroeconomic data, such as the GDP and population. Regional forecasts estimated by the number of sample markets. Now, talking about macroeconomic overview, we have the World Economic Outlook. We have here a graph, as you can see. The IMF forecasts global GDP growth at 3.0% in 2024, while Goldman Sachs projects a slightly lower growth rate of 2.6%. Both forecasts are optimistic about the US economy, with my IMF projecting modest growth and Goldman Sachs forecasting a 2.1% growth rate. This is driven by strong consumer spending and a robust labor market. Both the IMF and Goldman Sachs agree on a modest growth rate of 1.2% for the Eurozone. This is due to the ongoing energy challenges and the geopolitical tensions. China is expected to see significant economic growth, with the IMF forecasting 5.2% and Goldman Sachs predicting 5.0%, supported by government stimulus and recovery in domestic consumption. Inflation is expected to moderate globally, with advanced economies seeing lower rates. The Goldman Sachs predicts US inflation will fall to 2.5% by the end of this year, 2024. Both reports anticipate that central banks will ease monetary policies in the later part of 2024 to support economic growth. Key risks of the global economic outlook include potential financial market volatility, geopolitical conflicts, and climate-related disruptions, as noted by both the IMF and Goldman Sachs. Let's now discuss the current state and outlook of the global shipping sector, a critical component of global trade. In 2024, the global shipping sector continues its recovery and transformation following recent disruptions. Demand for shipping services remains robust, driven by steady global trade growth, particularly in emerging markets. However, the industry faces significant challenges, such as ongoing port congestion and geopolitical tensions. Despite these hurdles, operational efficiency is improving through the increased adoption of new technologies and the automation, which streamline operations and reduce costs. Shipping rates have moderately declined from pandemic peaks, but remain elevated due to high operational costs and capacity constraints. There is also a notable shift in trade routes, with a focus on diversifying supply chains away from traditional hubs influenced by economic and geopolitical factors. Efforts to reduce the sector's carbon footprint are supported by advancements in fuel efficiency and increased use of renewable energy sources. Despite these strides, balancing economic viability with sustainability targets remains a challenge, necessitating ongoing innovation and collaboration among the stakeholders. Now I will pass the presentation to my colleague Prashant Singh. Thank you very much.
Hello, everybody. Thank you for joining us again. So I will walk you through the segments dealing with what our forecast has in store. So to start off, I would just like to sort of give you a long-term outlook. We do this exercise at every first quarter or the first report of every year. which is basically a review of the second quarter 2023 report. And then we have an analysis, and we look forward to what could be the trends and points that will impact cement consumption by 2050, which in most cases is sort of the date by when net zero is supposed to be achieved by cement companies globally. So these are sort of the main characters, and sort of you see the main factors that are going to impact in our estimation, and how they're going to sort of impact cement consumption going forward. I would like to emphasize that when we talk about cement consumption, it does include, of course, not just purely OPC. Obviously, a greater focus these days is on blended cements, and this tries to encapsulate all of the progress that will be made towards reducing clinker ratios, and how that is incorporated into cement consumption over the next couple of decades and a half. Just to give you a brief review and not go over all the points, when we look at the factors such as economic prosperity, what do we mean? We mean new urban civil infrastructure construction that is required in these regions to boost urbanization rates. Which regions are we primarily focusing on? We're talking about emerging Asia, countries like India, Pakistan. We're talking about sub-Saharan Africa. We're talking about some of the countries in the Middle East and North Africa, and of course, China. Now, to a lesser extent, China as we go forward, because they already have significantly higher urbanization rates. But as we see that there are many economic challenges in China that are maybe perhaps going to change the picture as we go forward. We have another factor that is extremely important, which is maintenance and rehabilitation. Now, what does that mean? What are those factors that it impact? This basically means existing construction that will require maintenance and rehabilitation, and those projects and those constructions are primarily located in emerging Asia and China. Of course, there are exceptions. We have sort of the Infrastructure Act in the United States, which is looking to revamp infrastructure that has not been updated for the past 20, 30, even 40 years in the United States. So although this is a characteristic primarily that we see in developing economies, there are some other developed markets that are also experiencing this. Mind you, we also have not sort of seen the rehabilitation that will be probably required when we see an end to the Russia-Ukraine conflict. Another factor that has an impact on the demand is alternative construction methods, and these methods sort of include 3D volumetric construction, gypsum precasted panels, engineered wood board construction, steel framing, Randolph construction. And these are all things and methods that are being sort of encouraged as other alternatives to, as other more sustainable and circular economy alternatives. And these are predominantly found in sort of North America, developed Asia, and Western Europe. A factor that is sort of going to impact all of the region are emission restrictions, and we are already seeing stricter emission restrictions across the globe. And we infer that these stricter regulations might deter new cement capacity, or will make it more expensive in terms of the emissions criteria that they have to meet. So we will only see, dedicated cement capacity coming up in regions that are willing to sort of pay for those extra charges. So let's now move forward and delve deeper into the actual report. So what do we have? In 2024, we have a review of sort of what we looked at happened in 2023 and sort of adjusted our expectations. We expect global ex-China capacity additions to reach estimated 70 million tons. Global ex-China capacity in 2023 actually outperformed the volume forecast report second half update because of better than expected capacity expansions in Asia ex-China, led by primarily India. But although, of course, there were some capacity expansions in Pakistan and Vietnam as well. However, in fact, the bulk of the capacity changes are going, or actually, for that matter, reductions are going to happen in Asia, ex-China, and China. In 2024, Asia ex-China capacity additions are likely to increase, actually, as most markets in the region have recovered from the effects of the pandemic and sort of have come to terms with the elevated energy prices caused by the Russia-Ukraine conflict. India is expected to add anywhere between 30 to 35 million tons. Actually, those estimates are on the conservative side. If you look at sort of the expectations and sort of the commentary coming from two of India's largest cement companies, Ultratech Cement and Adani Cement, previously Holcim, the capacity additions are expected to exceed considerably. But we sort of take a conservative view on the actual capacity additions that can be expected. But that still means that India is likely to add at least 35 million tons this year. Other additions are expected to also, smaller additions are expected to take place in Pakistan and the Philippines. And both Philippines and Pakistan together should total around 8 to 9 million tons. So there are some capacity expansions in Africa until 2028. Of course, there's Nigeria, which is expected to see around 10 million tons. In previous editions, we had much higher expectations of capacity additions in Nigeria, but those have been tempered down by sort of the high elevated prices for cement we've seen in the past 2 years. In some cases, there have been, comments that Nigeria used to have some of the highest cement prices in the world, which has considerably negatively impacted cement consumption in Africa. So on this next slide, please. We have tried to encapsulate sort of what our expectation is year on year in the major markets. Of course, the only major market sort of in maroon that you see is India, where consumption is expected to increase between 7 to 8%. On the conservative side, there are some people who believe that consumption could actually be 8 to 9%, given that the current government has come back to power and seems to be pushing us, doubling down, should I say, on increasing infrastructure spending. The United States encountered a small decline in consumption last year, which was sort of unexpected, but things are supposed to come back to, resume normal service this year, and we should see small growth in the United States, and then obviously becoming stronger by 2025. China will remain a country where we see cement consumption declining. This is due to sustained issues in the real estate sector, which are not going to get sorted out anytime soon. This does mean that there will be sustained decline in cement consumption in China. The only question is the magnitude. The government is making consistent efforts to reduce the rate of decline, and we expect an estimated CAGR decline of around 0.7 to maybe 1% over the forecast period. Now, if we could go to the next slide, please. This is basically a expectation of what we looked at when we were revising capacity. At the darker side is the revised forecast. The lighter blue is the second half forecast. Now, the main culprit in the revision that you see is basically the decline of cement consumption in China, which was significantly worse than was expected. Unfortunately, numbers in 2024 do not also bring us any great deal of comfort when it comes to Chinese consumption. We do expect a continued decline, although it might be smaller than what we have foreseen last year. Asia ex-China will continue to sort of outperform in this revision, still outperform actually what we had forecast in the second half. And that's predominantly due to the strong performance of the cement industry in India. On the next slide, please. So as what we have done is every year since sort of the pandemic, we have incorporated 3 different scenario outlooks, just to give perspective on what could happen, because nobody actually expected that the pandemic would happen. In fact, nobody expected that Russia would invade Ukraine. So we have these black swan events, which instead of becoming rare, are becoming more frequent. So it is prudent to sort of look at outlooks which can sort of highlight what could happen in a good case or in a sort of more conservative case. When we look at the optimistic case, we can see cement consumption exceeding the base consumption in 2028 by a magnitude of 300 to 400 million tons, which would basically imply that Asia ex-China, South, Africa, and the Middle East perform much better than what we expected in the our base case. On the flip side, when we look at the conservative scenario, you can see that we would take into account that increased geopolitical events have a negative impact. We see increased instability in some major markets, including the United States. For example, if there is a change of power, there are considerable questions whether a second Republican government would be as enthusiastic in sort of passing funds for infrastructure development as the current government has been. So those questions, in addition to sort of the economic challenges faced in China, which if get worse, would significantly negatively reduce global growth. Alternatively, as you see, global ex-China seems to be doing well and will do well because Asia ex-China is doing well. So no matter sort of, in effect, no matter what happens in the rest of the world, as long as Asia ex-China is being able to meet its expectations, global cement consumption will sort of perform at the levels that we expect it to. And basically, to summarize, this. There's a quote by our CEO, which I'd like to sort of share with you, what's included in the report. Despite optimistic expectations for a sustained economic recovery in 2023, the global economy remains challenged by divergent regional growth trajectories. While reduced demand in China and Western Asia contrasts with strong demand in the US and across Asia, excluding China, supporting overall global demand, emerging conflicts, and escalating trade tensions among key countries, including the United States and China, threaten to dampen growth prospects if not effectively managed. So that basically sort of summarizes where we find ourselves. And to sort of give you closing remarks, the global economic outlook, in spite of these challenges, does remain remarkably resilient. Almost all regions except United States and China sort of saw an increase in cement demand in 2023. We expect Asia, China, and the Middle East to lead global cement consumption in 2024, and global total cement demand after their forecast revision decreased slightly by about 1%, more than 1% in 2023, and we expect only a slight increase of less than 1% in 2024. So thank you, everybody, for being here, and we will look forward to entertaining any questions that you may have about this report and any other. Thank you.